Assalamualaikum and hello everyone. My name is Tengku Nur Batisha binti Tengku Umat from BA 1144C. The topic that I chose is investing in common stock. So, what is common stock? Common stock is a type of security that form of corporate equity ownership. For your information, common stock are literally become investor preference because its potential current income in form of dividend and capital gain. However, as other type of investment, common stock also has its own advantages and also disadvantages. So, let's get to know about that. Okay, advantages of investing in common stock is stockholder will get substantial return in terms of dividend and obtained by capital gain. Next, it is easier to buy and sell the stock as mostly the stock are liquid, which means that they are able to change into money quickly at fair price. Other than that, the transaction costs of common stock are adequate. Rather than that, the stock price and market information also available because they disseminate in the news and media, which people can easily access to it. And lastly, common stock provide protection against inflation because mostly their return is more than the inflation rate, and inflation rate usually lower than equity price appreciation. Okay, for next slide, we continue with disadvantages of investing in common stock. Firstly, stocks are subject to various types of risks related to business, financial, buyer power, market, and event risk. All these risks may affect the stock's earning and dividend return to the shareholder. Next, stocks are volatile investment that may change and unpredictable as the value can move up and down based on the market's current condition. Lastly, stockholders need to sacrifice in their current income. Why do they need to? It's absolutely because from the stakeholder view, yes, they are the owner of the company they invest in, but they are the last one to get profit from the company as extra earning will be passed among employees, suppliers, and creditors first. And finally, we have to know risk in common stock. Business risk is where the uncertainty related to investment earning and ability to pay return to the investor. Next, financial risk is uncertainty of payment from companies' mix of debt and equity, as more debt means more risk. For purchasing power, risk is the change of changing price level such as inflation and deflation. Okay, then market risk about the value of common stock itself due to factors affect overall performance of financial market. Event risk, which unexpected event that will affect the value of common stock. And next, interest rate risk, that is the change interest rate. And lastly, liquidity risk, the risk of unable to liquidate the common stock at reasonable price. That's all from me. Thank you.